Today's question is DoorDashing profitable? Did you know that if you DoorDash or do Uber Eats or Grubhub or Instacart or whatever, that you are actually a business owner? If not, well, neither did my son. But that's what it means to be an independent contractor. You are essentially a self-employed business owner. And I will link an article that actually kind of gets into that, as well as the tax implications, in the description below this video on YouTube. There's that dog that's been plaguing me. He was lurking around earlier. Let's get rid of him. Anyway, my son, the reason I got on this subject was because my son actually came to me today. He was trying to figure out how to maximize time, mileage, and his income. And, of course, he hit me with that, and I started geeking out, doing all the math and researching everything. And in that article that I stumbled across, it actually talks about people like my son. It dubs them being accidental business owners, because a lot of people don't really understand what it means to sign up to be an independent contractor, things of that nature, okay? They think of the money that comes in as a paycheck, but it's not. It's really business revenue. You might have noticed that you don't actually get a pay stub. There's no taxes being taken out or anything, and I'll address that a little bit later. You're actually getting delivery fees and tips if you're DoorDashing like my son is. And these are considered business revenue. So, to get back to the central premise, to figure out if you're profitable or not, you've got to take the revenue that you've earned, your fees and tips, and then start subtracting all the expenses. What expenses, you might ask? Well, to start with, if you're DoorDashing like my son, then you're driving your car, which means that you are either keeping track of your gas and maintenance expenses throughout the year, hanging on to all those receipts, or you are planning to take the standard mileage wear and tear deductible. And I found out today that a lot of times that's anywhere between 35 and 65 cents, but I believe that for 2021 it is an average of 56 cents. You guys, don't quote me on that. Rely on your tax professional as you go to take care of all this stuff at the end of the year, but that is something that determines your profit. So you've got to deduct wear and tear or gas and maintenance from your overall revenue. You also want to deduct car insurance, and something that I learned today that I did not know is that Uber Eats, DoorDashing, all that stuff is not covered under your regular car insurance policy. No, my friend. As a matter of fact, if you get in an accident while you are delivering for DoorDash, they can deny your claim. You see, you need to have business use or commercial coverage on your policy. Now, for business use to be added on to a regular car insurance policy, supposedly it's a few dollars more a month. I can't verify that because that is something that we have not done yet, but that is a phone call that we plan to make tomorrow, as a matter of fact. Now, that
I have a question.
56 cents. Yeah, hit me with it, Nick.
What about pizza delivery and Jimmy John's, deliver, where they have to use their own cars?
Now, I believe that those folks, Pizza Delivery and Jimmy John's, I believe they are considered employees of Papa John's and Jimmy John's, but I do not know for sure. Today, I was focused just on DoorDash and Uber Eats and things of that nature, because that's what the boy is doing. But I can dig into that. That might be an interesting future video. So thank you for that, Nick. But to get back to the wear and tear issue on cars, the wear and tear on cars, in case you're not sure what all that is actually things like your tires, your brakes, your joints, the engine, the transmission, all of that stuff. Since you're not You just using your car for personal use, that is the wear and tear that 56 cents a mile goes to take care of. Some other things that reduce your revenue are a portion of the phone that you're using to DoorDash with, along with a car charger if you've got one, a dash mount, as well as your monthly phone services. All that stuff can be deducted from your revenue as a business expense. And of course, most people realize that if they're getting hit with tolls while they're delivering for, say, DoorDash or Uber Eats, those tolls can be deducted as well. The one thing that doesn't tend to get deducted is uniform expenses. At least for DoorDash, I think they send you a shirt or whatever, and it's recommended that you wear it, but since it's not required, if you end up having to replace the shirt or buy an extra shirt or whatever, that's not something that you can write off. However, if you are using, say, insulated bags, things of that nature, just try and keep the food warm, a little extra courtesy to the people you're dashing for. Those are deductible business expenses if you paid for them yourself out of pocket. You cannot deduct either for a home office, since your car is largely your office. That's why you're deducting all of those expenses. So, went through all of that. Once you deduct all those expenses from your revenue, whatever is left over is then what you would pay tax on. Remember, I mentioned earlier that taxes are not being deducted from the revenues that DoorDash is giving you. They're just making a direct deposit of all the fees and tips. You're going to have to pay taxes yourself. Technically, you're supposed to pay taxes quarterly and be setting some of those funds aside. And the way that you would do that is you would take whatever was left over, and a good rule of thumb is to just take 25% of that and send that off to the government. When you file your taxes at the end of the year, anything that's left over from that will be refunded to you. Now, we could do a whole other episode on taxes and DoorDashing and whatnot, because there is a lot of stuff that factors in. I just wanted to worry about profitability. So as we were charting that today for my son, we discovered that he had been out for 2.25 hours. 2 hours and 20 minutes, I think, roughly. And during that time, he had made $37.50. But once we started calculating up some of these business expense deductions that he's going to have, he was left with about $10 left over. This is a whole other town. Sweet sauce. What is that? Another working stiff. Yes. Awesome. So he was left with about $10, and that's what he would have paid taxes on, because you pay taxes when you're a business owner on your profits. So, is DoorDashing profitable? Yes, it can be. Might not be quite as profitable as you would have otherwise thought, but at least there we have our answer for my son for a few hours of work today. And guys, I'm really just sharing this with you to bring attention to something that was kind of new to me. I hadn't really given it much thought. Neither had my son. Obviously, this was kind of his thing. Wasn't something I was too worried about. But don't let the fact that you've got to take care of taxes be something that scares you or frightens you. Remember, I've done a video on the 4 ways to make money, and being a business owner is where you want to be. Ideally, you would want to come up with a way of setting yourself up so that instead of you being the one driving the car and delivering all the stuff, you had a team of lackeys doing it for you and just got a share of the profits. That's what you're really looking for when it comes to being in business. But if you have questions just about what I've talked today, guys, hit me with them in the comments below the video, or send them to me at fustyandfinance@gmail.com.